Welcome back. Now let's look at the Naira behavior a day after the CBN's rate decisions. We have Uyi Ohehen on phone to talk to us. Good afternoon, Uyi.
Good afternoon, and thank you for having me on today.
Right. So how is the currency market reacting to the central bank's rate decisions?
Yeah, today, yesterday MPC decision, the CBN maintained all rates. But however, there was a certain point that was picked out of the market who is supporting for the market. The CBN governor said he was going to help with price stability and also control inflation and attract foreign investors and effect to the economy. This is a positive development for the market. As you can see with that, the action, we see a lot of inflows in the market today. Hello?
Hello, yeah, I'm hearing you.
Yeah, I say it's a positive development in the market. I say some inflows, tickets of inflows coming into the market today, which is very good for the market and for the economy. But at the moment, it might not be much, but for future, we believe that there will be more and more inflows to the market.
All right, Uyi, what are we going to see the Naira close at today? That's in a few minutes' time.
Okay, we can see the market will close around 305, 305.5 if the FMDQ Bank decides to intervene through some primary market dealers today.
All right, thank you very much for your time, Uyi. Move on now to African governments in the grips of Eurobond fever should look closer to home to secure financial vital to their economic development as borrowing costs on international debt markets increase. This advice is coming from the president of the African Development Bank, Dr. Akinwumi Adesina. Africa has been a boom in dollar debt issuance over the past decade as countries have sought to borrow often for costly infrastructure projects at a time when investors in the United States and Europe sought out high yields in emerging markets.
It's all well and good when the interest rate environment is actually quite accommodative for that. But as the Federal Reserve rates go up and you begin to see a lot more movement of money, capital out of emerging markets, and you have a tightening of that capital market. These are pools of capital that needs to be actually tapped for Africa's development. And the bank is working a lot in this particular area. We're helping countries to also be able to issue domestic bonds in domestic currencies to be able to raise money, which is very, very important. But at the same time, working with the pension funds to be able to have a regulatory environment that allows them to be able to have asset classes in which they can invest in. There is nothing wrong in taking debt. It really depends on how you raise it and what you raise it for. I think many countries went into the Eurobond market because they saw it as a way of showing that they have very good economic governance, very good political security. I think the commodity prices were also very high, which created a boost for them to be able to raise capital by issuing Eurobonds.
Akinwumi Adesina, the president of the African Development Bank. And it's on that note that we wrap up today's edition of the program. Thank you very much for watching. I'm Chimeze Obi Iwagu.